Today on the Social Investing Network, JayZ and Jack Dorsey team up to launch Bitcoin Academy, the free online and in-person training aimed to spread financial literacy for residents of the Marcy project in New York. How successful can this be? And will we see it take off across the country? Plus, the Walmart Heir and the Denver Broncos agree on a $4.6 billion sale, the most expensive sale of American sports franchise. However, there's no word yet on if my $20 fantasy football team has any bidders. And what kind of rights do NFTs actually grant you? Are you truly free to do whatever you want with it? We dive into this topic and more in our No Bull Guide. It's Friday, June 10th. Subscribe below, hit the notification bell. Now let's get into it.
JayZ and Jack Dorsey have teamed up to launch a Bitcoin-focused financial literacy project called the Bitcoin Academy. Guys, this project consists of free bi-weekly classes. It's going to be offered in person and online at the Marcy House public housing projects in Brooklyn, which is where JayZ himself grew up. To me, I find this interesting because, first of all, Jack Dorsey and JayZ being boys is kind of like funny to me, you know? Kind of an odd pairing, you know, like Jack Dorsey doesn't come off as someone who's cool, and like JayZ is like the epitome of cool. Like this guy just drips cool. So I didn't really think those guys would hang out, but there's like pictures of them hanging out and, you know, partying on yachts and stuff. And they've also done business together. Jack Dorsey's company Square, which is called Block now, took a majority ownership of JayZ's streaming service, Tidal, for $300 million back in May of last year. I mean, nobody uses Tidal, so I don't know why Jack Dorsey paid $300 million for this. But this project's, yeah, exactly. That's why JayZ's you know, becoming friends with Jack. But this is an interesting thing. I mean, I'm happy that they're offering financial education and it's going to be free. But the fact that it's like a Bitcoin focused one kind of gives me a little bit of pause. I think that if people are struggling financially, they should be getting financial education. But Bitcoin's a very, very volatile asset. That should be something that's taught at the very end of the class. You know, it's like you got to cover the basics first and then cover Bitcoin as like, okay, well, this also exists. I mean, Delano, what do you think about this?
Yeah, Zaid, I would agree with you. You have to cover the basics first. And I think, you know, financial literacy should encompass, you know, cryptocurrency education. But if you first start with the basics, especially if you're talking about people that are in economically underserved areas or anything of that nature, you want to start with the basics. Now, maybe cryptocurrency entices people because it's, of course, a great technology and we're in a place where it's being talked about a lot. So maybe that entices people to take this course and therefore learn more about their financial landscape and the financial options they have for them. So if it's that, then I'm for sure down with this. But I definitely want everyone to have their financial foundation strong before they can dip into other areas or other asset classes.
For sure. Bitcoin should be almost like the master class that happens if you pass the traditional, I guess, basic financial literacy programs. But the silver lining, I guess, or like I guess a sign of hope would be that maybe Bitcoin is just like a draw, and maybe there's a way for both of them to work together to expand it to include more basic financial services and literacy. So we'll see. But that, I agree, it should be more expansive than just, hey, learn about Bitcoin.
Definitely good marketing though. Everybody's talking about it.
Yeah, exactly.
That is good marketing. So, Zaid and Nicole, the Broncos have agreed to sell to the Walmart Heir for $4.6 billion. The agreed upon sale price is a record-setting price for a North American team. So the Walton Group, which is headed by Rob Walton, was among four people that put a bid in for the team. And Rob Walton is worth an estimated $59.1 billion. So he's not going to have a problem coming up with the nearly $1.4 billion, 30% of the purchase price that the NFL requires in cash. So if you're thinking about what's happening amid the whole economy right now, amid market uncertainty, when you talk about equities, tech stocks, cryptocurrencies, sports teams have actually emerged as an asset that have shown consistent growth. They've kind of been insulated from the market conditions. Let's look at like team values and how they've risen annually across the board. So you look at NFL teams, this is according to Forbes, they grew 14% year over year to about an average price of average valuation of $3.5 billion last year. NBA teams, take a look at them, they increased 4% last year to reach an average $2.2 billion, and MLB teams rose 9% to $2.1 billion. So if you're thinking about the past sales and actually how this measures up, this 4.65 billion price tag measures up to past sales. Let's look at it. Number 2 is the New York Mets, which were sold in 2020 for 2.4 billion. Number 3, the Brooklyn Nets, which was 2.35 billion in 2019, and the other NFL team, which is in 2018, was the Carolina Panthers for 2.275 billion. Zay, these are eye-watering marks. Like, I mean, for franchises, what do you think of this landscape of teams being sold?
I have a lot of thoughts on this. First of all, I don't ever want to hear the owners cry about being poor when it comes to these like player negotiations. Whenever they're like doing contracts for, redoing the contracts for players, and because they're always complaining about, oh, we don't have enough money. These valuations for these franchises are skyrocketing, and it makes sense, right? What is the ultimate rich guy flex? If you have $50 billion, you can have paintings of like Picasso and stuff, right? You could pay $100 million for that. But what is the ultimate rich guy flex? Yeah. It's owning a sports team. Right? That's why they're worth so much, because you're bidding against other rich guys, and rich guys have egos, and they just want to own a sports team, which is why you see these valuations go higher and higher and higher. And you can't put a value on owning a sports team. You're the coolest rich guy in the room. Even if you're worth $30 billion, you're cooler than the guy who's worth $50 billion because you own a sports team. So to me, you can't put a value on that. I just don't want to see the owners cry foul or cry poverty when they're negotiating with next time they're negotiating with players for a cut of the revenue.
100%.
You guys got
I would agree with you there.
Interesting. That is interesting. Well, going a little bit back to NFTs, you can now buy NFTs with a credit card. Mastercard is reducing the barrier to entry for people to buy NFTs by bringing its payment network to the world of NFTs via the social commerce platform Spring. This partnership is meant for NFT creators and to help them grow their potential customer base to people all over the world by making the purchase process more accessible. And that is according to Mastercard in their press release. There's 2.9 billion Mastercard users worldwide. So this change really could make a significant impact to the NFT ecosystem, with customers now being able to buy NFTs on the marketplace of their choice without the need to actually buy crypto. So Mastercard did do a survey of 35,000 plus people in 40 different countries and found that 45% had purchased an NFT or said that they would be down to do so. And considering that it is a 2 billion plus industry, i.e. $2 billion was spent on NFTs during the first quarter of 2021, representing a year-over-year increase of 2,100%. Clearly, the opportunity for creators to unlock digital engagement through NFTs is huge, and Spring has integrations with YouTube, Instagram, Twitch, TikTok, and Linktree. So it's a good time for Mastercard to keep relevancy, right? I think all the traditional cards are going to be doing things like this, but we also can't ignore how this opens the door for more people to get into NFTs.
Yeah, I mean, it's smart on them to do it. Obviously, there's a lot of interest. I'm shocked to hear the number is 45% have either bought or interested in buying an NFT. I thought that was very, very high. But there you go. There's a lot of interest in it. MasterCard is getting with the times because, it's a source of revenue for them. So I'm sure we're going to see every single one of these credit card companies hop on board. But, I wonder how like us being in a bit of a bear market impacts that. Maybe they're just kind of getting ready, gearing up for the next bull market. But right now, just being in a bit of a crypto winter, I'm hearing less buzz about NFTs recently.
Yes. Unless it's a musician that's using NFTs to do things.
Yeah, exactly.
Then there's lots of buzz.
Exactly.
Amazing. Well, Zaid, could you tell us what's up next?
NFTs have become popular because they let you own a digital item, but just how much do you actually own? Like, who owns the IP? Let's clear up some of these NFT rights questions with our No Bull Guide and say hello to technology and blockchain lawyer Nick Palatucci. Nick, thanks so much for being on the show today.
Yeah, thank you for having me.
So I'm gonna just kick it right off. I've bought NFTs before. When I buy an NFT, what is it do I own? Like, can I do whatever I want with it? Can I license it? Like, how do I know what rights come with the NFT?
Right. So the NFT itself, right, is not even an image or a piece of artwork. The NFT is just a token that references or is linked to a piece of artwork. And if you want to know what you own, you have to look at the terms on which it was sold to you. So a lot of people think that if you buy an NFT, that inherent in that purchase is some rights to the underlying artwork or the artwork that it's associated with. But that totally depends on the terms of the sale of the person that sold it to you.
So where are these terms of sales? Because like whenever I buy something on OpenSea or eToro, like I don't see anything as far as like, oh, you're agreeing to all these terms. It's just like I connect my wallet, it shows up in my wallet. Like where are the terms?
Yeah, I mean, I think on a service like OpenSea, you'd have to look at their terms of service and look at any paperwork that's associated with the sale. It's also possible that the functioning of smart contracts could give you some rights, but again, that's something that should be specified at the time of sale. If there is no paperwork, then all you're buying is the token itself, and you could say an implied right to privately use and display the artwork. So just the same way that if you buy a book in a store, you have the right to read it at home and you have the right to share it with your family. You don't necessarily, unless there's other terms attached, have the right to hold a reading or make a book based on that book or do anything else that typically is associated with ownership of intellectual property.
So what you're saying is like if I go and buy a Harry Potter book, that doesn't give me the right to make a Harry Potter movie. But then my question would be like, recently we heard about Seth Green, right? Seth Green, he owned a Bored Ape and he was gonna make a show or a movie around that character. So, and then he got his Bored Ape stolen. What gave him the right to even make that movie around his character? And then now that it's stolen, can he not make this movie anymore?
Right. So this is an interesting case, and I think the seller of Bored Apes is an organization called Yuga Labs, and there are terms related to their sales, and they do at least say that they transfer some IP rights along with the sale. So their position is that when you buy the token, you also have the rights to the individual artwork, and if you look at their terms, it then says all future transfers of rights will be governed by the blockchain. Now, that's not a very clear delineation of what the rights are. And so that's, I think, where the confusion has come from. Once he lost the access to that IP, it depends on how you read the terms of Yuga Labs' original sale, whether or not the IP also transferred when he lost the token. And so, I think, did he have the right to create the TV show when he owned it? Probably. Does he have the right to create it after it's been transferred away from him? Not so clear.
Yeah, that's just so interesting.
So hopefully he's able to go forward with the show.
Yeah, it's just, and I wonder, some people were saying this was like a whole marketing stunt, which would be just genius, right? Like you never know with the internet nowadays. So that brings me to the question along the lines of copywriting with NFTs. Like what if I own a copyright to something? What if I made a piece of content or something, an artwork, right? Take my daughter's artwork, put it on the blockchain, mint it as an NFT. Or what if someone else took that artwork and minted it as an NFT? Like what does that mean, that they own the copyright or rights to it? Like I'm kind of confused there.
Right. So I mean, if somebody is taking your artwork and linking it to an NFT and then advertising it, say showing posting it on OpenSea with a picture of your artwork and selling it, that person's infringing your copyright. You are the author of that piece of artwork, and that person is sort of taking your artwork and selling it as their own. The same way that if I took a picture or if I, made a copy of your painting or your book or Xeroxed your book and sold it in a store, I'd be infringing your copyright. Now, there is some question as to whether if I simply made a token that referenced your artwork, but it didn't actually contain your artwork, that I could say, well, I'm just creating something that points to a piece of artwork and I'm not actually selling the artwork itself. But I don't think that's a very good argument. I think you'd probably, the person minting that NFT would probably still be infringing your copyright.
Yeah, it's like saying if like I just made a Mona Lisa coin and pointed it to the Mona Lisa and say, oh, I'm pointing this token to the Mona Lisa, even though I don't have any ownership of it. It's just so fuzzy and confusing and just like, do you know if there's been any legal case brought about this stuff? I mean, I know it's still pretty new, but like, has there been any sort of legal case yet?
Yeah, I mean, I think this stuff is very early and litigation takes a long time. So when you are looking at the analysis of things like the Bored Ape situation and other similar disputes, you're starting to see people give their opinions about the way that these will be treated. And again, a lot of this stuff, like I said, depends on the terms of the sale and is going to follow traditional IP law. And so that's where we look to see sort of how some of this is going to turn out. But there's certainly new questions. There's definitely questions about how smart contracts function in the transfer of intellectual property rights, and there are certainly questions about what it means to transfer ownership on the blockchain and how that relates to the transfer of ownership of intellectual property. So a lot of that stuff does remain to be seen from a legal perspective.
Yeah, I mean, there's no like actual laws in the books governing NFTs. No one knew what an NFT was like 18 months ago. So this is still kind of like pretty new. I got a question about like utility, right? A lot of these projects, a lot of these NFT projects are starting to have utility. Recently, Mariah Carey is auctioning off like a fan giveaway experience if you buy her NFT. What if someone does that and doesn't deliver on that utility? Where it's like, oh, if you buy my NFT, you'll get access to all these perks. But then they're like, sorry, we couldn't make it happen, whether it's purposefully or not. Is there any legal ramifications there?
Yeah, it's an interesting question. I mean, I suppose it's the same as any contract, right? So if you sell somebody an item and it includes a promise, a binding promise to do some activities or to take some activities in the future, and you don't follow through, then yes, you could be sued the same way that if you signed a contract or if you sold a ticket, if you sold a concert ticket to somebody and then didn't provide the actual promised service. I think the other issue with utility is it comes up in the context of whether or not the NFT or the blockchain token is a security. And so utility is an important factor in understanding whether what you're buying is something like an NFT, which is something that you might enjoy. You might say you could enjoy in yourself for its own use, either because you get to look at the art, or like you said with the Mariah Carey example, you get to go to the concert, versus something like a share of stock, which is purely about making money. Some people use NFTs simply as a way to try to buy low and sell high, and then you get into regulation around investing in securities.
Yeah, it's like kind of in this weird space. I think the takeaway that I'm having from all this has been an awesome conversation, but I think the takeaway that I'm having is like, sure, NFTs are like this new paradigm in the way of digital ownership, but we're still kind of relying on old school laws, old school IP laws, old school contractual laws, and the government to essentially enforce those laws on this thing that's supposed to be this decentralized system, right? Like the whole point of NFTs, it's all decentralized and we don't need to have a third party involved. Well, that's not true, because if something goes wrong and this whole murky world of IP rights and copyright rights, we still got to get like the legal system that's been established for hundreds of years to get involved and enforce these things. So I think it's kind of like a weird thing where it's not as decentralized as maybe people had sold it as.
Yeah, there are a lot of norms, two things. I mean, one, there are a lot of sort of norms and ideas around cryptocurrency and around blockchain technology that are certainly exciting ideas. For example, the idea that transferring ownership of the token would also transfer certain rights to the IP. And to the extent that those can be systematized and normalized and people can rely on those in the future, that's great. But right now, as people are still figuring this out, you're right. There's none of that stuff is inherent to the form, and it's not going to come automatically. It needs to be the legal work needs to be done to support the kind of IP transfers that people are working on. The other thing I'll say is just intellectual property specifically is entirely a legal creation, right? If there wasn't IP law, if there wasn't background IP law, then I could steal your photo anytime I wanted to, right? I could copy your picture, right? I mean, this is all, the point of intellectual property is to create a monopoly for the artist at a time where there otherwise wouldn't be one, so that we can create markets in art and in other content. And so we are going to be, no matter what, relying on courts to enforce those rights, even if they're able to very clearly transfer them using tokens.
Yeah, no, you bring up an excellent point. Nick, this has been an awesome interview. I want to get your last take here. How long do you think the legal system will take to catch up to what's happening in the NFT space? Are we talking months or are we talking years? Because I have no reference of how long the lawyers take to kind of catch up to all this stuff.
Right. Well, I think the industry has a lot to do to be clear about what they are transferring when they're transferring these rights. Similarly, in royalties, a lot of people think that royalties are inherent in NFTs. They are not. So the industry has a lot of work to do to make sure that they are matching up what they think or what they say or what they want the rights to be with what the actual rights are based on the legal paperwork that they're creating. In terms of understanding some of the novel questions that are coming up for legal, I mean, litigation takes years, and I don't expect there to be very clear answers on this. Certainly not in the next 1 or 2 years, maybe in the next 3 to 5 years on some of the novel questions that are coming up.
Man, that's a long time, especially in the tech space. But we'll be all watching it closely. We all know that lawyers have a lot to say about this stuff. I really appreciate your insight on all this stuff. I feel a lot smarter about NFTs now. Thanks so much for being on the show today, Nick.
Thank you so much for having me.
Take it easy. All right, guys, that does it for another fantastic show. Remember, we go live Monday through Friday talking stocks, finance, crypto, NFTs. So be sure to hit that subscribe button, hit that notification bell. We will see you guys on Monday.
Hey guys, thanks so much for tuning in. Be sure to like, comment, and subscribe, and hit that notification bell. We'll see you tomorrow.